Well, holy smokes, everyone. The biggest economic shock, more shocking than me losing my beard, starts tomorrow. Because what happened last week? We saw huge volatility and massive sell-offs in the tech sector. We're seeing the dollar surging. We're seeing gold hitting all-time highs. We're seeing treasury yields rise. And we saw the rise of DeepSeek, China's AI, rattling the tech sector. But people, that is peanuts against the biggest risk of all that's about to start tomorrow. So everyone, what exactly is this biggest risk we've seen in our lifetime? This could start the biggest economic war we've seen in recent history. Well, that's exactly what I'm going to go over in today's video. So let's not waste any time, ladies and gentlemen. Let's get straight into the news, the facts, and the data. Well, okay, first things first is this, everyone. We need to talk about Trump's tariff plan because this is going to cause huge shocks in the markets, and we're already starting to see the ripple effects. So look at this. Trump tariff plan rattles stocks, pushes dollar higher, and treasury yields go higher as well. But that is the least of our worries. It's just getting worse. So Trump is threatening punitive duties if Canada and Mexico do not take stronger action and to halt the flow of all the stuff that's coming over the border that's severely harming people, as well as illegal migration. And Goldman Sachs economists have estimated that across the board tariffs on Canada and Mexico would imply a 0.7% increase in core inflation and a 0.4% hit to gross domestic product. But again, people, I've been going down this rabbit hole researching deeply, and it's much worse than this. So look at this next article. We're going to go over two charts that show markets are skittish about Trump's tariff policy. So I'll bring up this first chart here. We can see tariffs could push US inflation outlook higher. And what this means is the Federal Reserve is going to have to either not do any rate cuts, which it promised it would do in 2025, or even go on the reverse and start lifting interest rates. But not just that, look at this next chart. Trump's tariffs could take the US back to the 1900s. So custom duty revenue as percentage of good imports. We can see here, if the 25% tariff is imposed, we're going to see this rise significantly. And we also just got this news in, and this just won't affect Canada. This is going to affect the entire world, but Canada is about to take a massive hit. So tariff war would likely put Canada into recession, economists say. But I thought, okay, maybe it'll just be a mild recession, but no, they're about to take a massive hit to their GDP. So President Donald Trump's 25% tariff on most goods the US buys from Canada, and Prime Minister Trudeau plans to retaliate on approximately 105 billion US worth of American-made products, and will trim real gross domestic product by 2 to 4%. That's right, their GDP is going to take a hit of 2 to 4%. This is absolutely massive, everyone. Now, the reason why this is so important, because their economy was only projected to grow at 1.8% in 2025, and that would imply the first annual contraction in 16 years outside the pandemic. Consumer prices are likely to increase at a faster than the Central Bank of Canada said at their 2% target, and the unemployment rate is expected to rise, and the Canadian dollar will weaken further. And this is weakening currencies all over the world, especially the Australian dollar. Now, like I said, this isn't just going to stop at Canada. EU warns the US it will retaliate if Trump imposes tariffs on goods. Now, the bloc regrets Trump's tariffs on Canada, Mexico, and China, and tensions with the EU are already high after the Greenland fiasco. So that is definitely right here, everyone. The EU is shaking in their boots. They know tariffs are coming because Trump just put out this threat. So on Friday, Trump said that he would absolutely impose tariffs on the EU. The European Commission and member states will discuss possibility during a trade ministerial in Warsaw on Tuesday. So as we can see here, everyone, the geopolitical space for economics, for the economies in your countries have never been higher. And we're all about to take a massive hit because this next tariff is going to make all your car prices go up massively. So look at this next report put out by Bloomberg. Car prices could face $3,000 increase if tariffs hit the auto sector. So suppliers fear shutdown within a week if tariffs kick in, and manufacturing hubs warn that thousands of jobs could be lost. So what are we going to see happen here in the auto sector? Well, I went deep in this report and it isn't going to be good, everyone. So they say here, we're talking about thousands and thousands of jobs being lost. He said we'd truly be a ghost town here in Windsor if we lost this type of business. Ontario Premier Doug Ford has warned that more than 500,000 jobs may be lost just in Canada's most populous province, many of them in the auto sector. So this is very, very devastating, everyone. And if the tariff war escalates, if, for example, Canada retaliates, puts more tariffs on, and then Trump retaliates again, it could get even worse than this. Now, industry experts said that sourcing every last piece of a vehicle within the US supply chain, as Trump wants, is a tough task. On the campaign trail, Trump promised that his protectionist policies would bring manufacturing jobs back to the US, raise revenue, and lower the country's trade deficit. Analysts have warned it could take years to shift production and create new jobs. And that's exactly right. Companies aren't going to just all of a sudden move overnight, because even though they have Trump in office now and he's very pro-America, you could all of a sudden get a very left-leaning Democrat president in the future that could just go ahead and reverse all these policies. And now you've just invested hundreds of billions of dollars and it's all gone to waste. Now, President Donald Trump tariffs against Canada and Mexico will threaten production at automakers across North America and set record vehicle prices even higher, with $250 billion in trade set to be disrupted. So this is absolutely massive, everyone. But it's not just the auto sector. You filling up your car at the pump could about to get much more expensive. So tariffs seen disrupting oil markets, raising US pump prices. So the administration ordered a 10% levy on imports of Canadian energy, and US Midwest refiners rely heavily on northern neighbors' crude. So again, this is going to have a big impact on prices at the pump, and this is going to flow onto all consumer goods because it takes gas, it takes petrol to ship or to truck all these goods across the country. And so that's going to flow onto these businesses and they're going to pass these prices onto the customer. Now, Rickards has put out a warning saying all these are going to lead to a massive US recession. So he said this is problematic for stocks independent of any crash potential. Inflation has persisted, energy prices are back up to interim highs, unemployment is going up, job hiring is frozen, and the manufacturing sector is contracting. Now, the Federal Reserve rate cuts won't help, he said. They do not provide stimulus. Rate cuts are a sign of economic weakness, not strength, and that's true. The Fed is not leading the interest rate market. They are only following the market down. Of course, a recession could trigger a market crash, but even if it does not, recessions are typically associated with a 30% decline in stock valuations over a year or less. Now, the investment strategy for a recession is substantially the same as the crash strategy. Now, the third risk he warns about is currency wars are back and trade wars are coming. So the super strong dollar today makes it difficult for other countries to buy US goods, and tariffs would make the global trade dollar shortage worse as foreign investors seek dollars to jump the tariff walls and invest directly in the US. Now, both the strong dollar and the coming US tariffs invite retaliation by trading partners who will put up their own tariff walls. The result will be a global contraction in trade that could resemble the trade collapse of the 1930s during the Great Depression. US stocks fell 85% from October 1929 to June 1932, and during that episode of trade wars, a repeat could be on the way if economies such as China that could be boosting consumption choose to fight trade wars instead. So everyone, I know what you're thinking. Well, okay, how can we protect ourselves? Well, what has been performing well lately? Gold, and that's what I've been warning about all my investors lately. You want to get into gold with all the risk mounting up right now. Gold investors, as Trump would say, can't stop winning, and I think gold is about to go up even higher. Because look at this next report. Gold hits new record high. Dear Jerome Powell, is everything under control? Well, no, ladies and gentlemen, I don't think everything is under control. And even though the dollar's been going higher, which is normally bad for gold, gold is still hitting all-time highs and going up even more in other currencies besides the dollar. And like I warned about, gold is performing very, very well right now, is at all-time highs. But what's lagging gold and what I think could go up even higher is gold miners. And with this latest executive order we got from Donald Trump, I've never been more bullish. Because look at this, everyone. That is it. We are back. On January 20th, President Trump signed an executive order called Unleashing Alaska's Extraordinary Resource Potential. It reads, by authority invested in me as President by the Constitution and laws of the United States of America, it is hereby ordered. The state of Alaska holds an abundant and largely untapped supply of natural resources, including, among others, energy, mineral, timber, and seafood. President Trump indicated he wants to develop these resources to the fullest extent possible. Unleashing this opportunity, however, requires immediate end to the assault on Alaska's sovereignty and its ability to responsibly develop these resources for the benefit of the nation. Now, the executive order directs U.S. policy to fully avail itself of Alaska's vast land and resources for the benefit of the nation. While specific policies and initiatives on mining haven't been announced yet, this is a very positive indication of the federal policy-making mindset at the presidential level. And today I want to share with you a Pacific company with you that owns a significant estimated mineral resource of gold and copper in Alaska. So with no debt and approximately $4.4 million in cash and cash equivalent as of September 20th, 2024, and a project in the great state of Alaska, the sponsor of today's video is US Gold Mining, trading on the NASDAQ with ticker symbol USGO. So at its April 2023 IPO, gold was worth around $1,930 an ounce. Now it's trading at an all-time high. So their flagship Whistler gold-silver project includes their gold deposits with combined estimated mineral resources of 6.5 million ounces of gold equivalent in the indicated category, plus an additional 4.2 million gold equivalent ounces in the inferred category. Now, the most critical development, in my personal opinion, and the potential value driver comes from Trump's administration attitude towards Alaska. So in the iconic photo above, Trump, still wounded by the attempted assassination, is shaking hands with Mike Dunleavy, the governor of the great state of Alaska. And I tell you this because Mr. Dunleavy is also in the next photo. In this one, Governor Dunleavy is visiting the company's Whistler project in Alaska with Mr. Tim Smith, CEO of US Gold Mining. Now, Tim Smith came to the US Gold Mining from Newmont, 100-year-old gold producer, one of the largest gold mining companies in the world. Now, before Newmont, he worked for Goldcorp, which at the time was Canada's biggest gold producer, then they merged. But I want to talk to you about the company he worked at before joining Goldcorp, because what he accomplished there is precisely what the board of US Gold Mining wants him to deliver for its stockholders. And he worked at Kaminak Gold Corporation. Now, Kaminak discovered the gold deposit in the Yukon and advanced the resource until Goldcorp acquired it for 520 million Canadian, one of the most significant buyouts of the past decade. Now, US Gold Mining owns a project that has combined estimated mineral resource of 6.5 million ounces of gold resource equivalent in the indicated category, an additional 4.2 million ounces of gold equivalent in the inferred category. Now, the CEO of the team that sold Coffee Gold Deposit owned by Kaminak to Goldcorp for 522 million Canadian in 2016. And while we are talking about different projects where the outcomes could be different, this is the reason why he was recruited to be CEO of USGO, so it can utilize his skill set to work towards similar goals for US Gold Mining. Now, this is all happening while Bank of America predicts that gold bullion will hit $3,000 per ounce in US dollars, and my alert today concerns a stock trading at approximately 40% below its all-time high as of February 1st, 2025. So everyone, start doing your research on US Gold Mining today. Again, that stock ticker symbol USGO. But everyone, what do you think about all of this? Let me know down below. Now, for my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.